Welcome back. Let's get chatting with the management of Ramkrishna Forgings. Lalit Khetan, who's the Executive Director and CFO of the company, joins in after their second quarter numbers. It was a good set. We have seen their revenues for the company grow by almost 42% in the second quarter, taking their half-year revenue up to around 52%. Margins stable at around that 21-22% mark as well. The company had expected to achieve a guidance of almost 20% CAGR over the next 3 years. Let's, ask them. Mr. Khetan, thank you so much for joining in. Season's greetings to you. You were looking at 15 to 20% growth in this year. The first half itself, you've done around 52 odd percent. Just wanted to understand whether you would like to, up your guidance from this 15 to 20% mark.
First of all, thank you and very happy Deepavali to you and the entire viewers of CNBC-TV18. Yeah, certainly we have achieved a good number, but certainly guidance is going to be remaining in the range of 20 to 25% growth, and we will stick to the guidance.
Okay, so you're maintaining 20 to 25% growth for the full year?
Yeah, the full year 20 to 25% over FY22.
Okay, can you just break up the growth for us? How much are you expecting in terms of the domestic market as well as some of your key export markets?
See, overall revenue will be around 60% for the domestic and 40% for the exports. And again, in the exports, North America certainly will take almost 2/3 share. Europe and others will take 1/3 share.
Right. Just wanted to understand, why is it that you keep your guidance at just around 20 to 25% as against the first half revenue growth of over 50%? And that's primarily because, you are bullish on the US truck sales as well. The recent numbers that we have, there was a record high monthly Class 8 truck orders in North America. What makes you circumspect?
No, we are not circumspect. We are quite confident. But numbers, you see the commodity prices are also cooling down. And so prices may have impact on the top line. And we want to be a little conservative on account of global instability in Europe and little bit on account of inflation. So we want to, and rather, if you look at the North America, there also recession and inflation, lot of things are going on. That's why we want to keep us at 20-25%, not very aggressive.
Okay, your export volumes, in fact, in the quarter gone by were down 2.3% on a year-on-year basis. Do you have any visibility in terms of what your volume guidance for the export market specifically would be in the second half?
It will be certainly up from here by at least 10% in terms of volume.
And overall volumes for this year? I mean, last year you did 1.11 lakh. This year, the first half, you've done around 62,000. What does your overall tonnage target stand at this year?
Yeah,
for this year?
So the second half should be better than the first half, maybe in the range of 5 to 10% in terms of volume guide.
So second half would be about 10% higher than the first half. You have 68,000 tons coming here. First half, you've done around 62,000 tons. So you're looking at a number closer to 130 this year itself. Is that correct?
Yeah, it's near to that.
Okay. Can you give us an update on your debt figures? Because your debt has been on a downtrend. It stood at, I think, a little around 1,300 crores as of the previous quarter, and it's down 16%. Can you just tell us what the update is and whether or not you'd be looking to reduce debt further?
Yeah, we are on the certainly reducing the debt, and with the kind of performance we are posting, the debt will go down further. And already we have given a guidance in the next 3 odd years, we will be near debt free. So we will be working on that target and consistently reducing in terms of our performance, and whatever will be the free cash flow, we will try to reduce our debt from that.
On an EBITDA per ton basis, what kind of numbers can you do? I mean, how much do you think is sustainable going forward, given the correction that we're seeing in raw material prices as well?
See, so raw material prices in our case is certainly pass through, whether it goes up or it goes down.
Exactly.
So margins are going to remain at that level. So top line may be a little bit here and there, but margins will be maintained, and kind of EBITDA we are posing, I think there will be a growth on that because volume will grow. Okay. And that will help us in improving the free cash flow, and with that certainly the debt number will go down.
Okay. How is business looking in the domestic market, sir? Because, we were just talking to the management of Rajratan Wires, And they said they are a bit cautious on the export market, but they're quite bullish on the domestic piece. They're expecting around 10% growth. Tell us how demand is looking like in the domestic market. What would you be guiding for? Do you think that's probably going to outpace your expectations as well?
Yeah, domestic market demand is quite robust, and we are seeing quite a good demand in MSCB. We are mainly in MSCB and LCB, and we are seeing increase in targets by the OEMs, and rather weekly targets are even revised positively. And we see a very good H2 also on account of domestic. Coming to exports, yes, export also we look to grow in H2. What we did in H1, we think we will do much better in H2 in exports, because see, you have seen the Class 8 numbers coming up. In Europe also, if there are concerns on the energy side, energy cost, manpower cost, inflation. But one thing is that Europe is also looking at importing more and more on the component side, and that is helping us. Plus, the China's policy of zero tolerance on COVID is not helping China, and that is also helping us in terms of exports.
And finally, before we let you go, you said that you are increasing your capacity, etc. as well, and by FY24 you could do revenues of almost 5,000 crores. That would be an 80% jump from where we are right now. And also EVs, you expected that to be about 6% of your overall revenues by FY24. Where do these numbers stand at by the end of FY23?
No, I think a little bit correction. My numbers, what we've given, 5,000 crore top line, that is FY25.
Okay, that's 25.
Similarly,
okay.
that was, yeah.
And, EVs?
So, yeah, EV will be, certainly target is to achieve 6% of our top line by EV, and we are consistently growing. Recently, we have got an order of 15 million euro from one of the European OEM, and we are working with our OEMs to increase our presence in EV.
All right, thanks a lot, Mr. Khetan. Always a pleasure speaking with you. Wish you a happy Diwali once again. Let's hope that the second half of this year pans out as you've guided for as well. Strength is what the company is looking at in terms of volumes, but cautious about the overall revenue picture, primarily because commodity costs are coming down, even as they're confident of maintaining their EBITDA on a per ton basis. We take a short break, come back and